One of the clearest indicators that environment is changing is looking at volatility. You don't need a VIX chart. Too many people spend their time looking at a VIX chart saying, oh look, volatility's falling. This must mean something's changing. You know volatility's falling. The reason that you know volatility is falling is because of the way that the markets trade on a day-to-day basis. Check over here. This is July last year, post a piece of data, very high volatility, thin order book, fast movement, lots of jumping around. That's a certain type of market. Markets will stop being this erratic and they will gravitate more towards a much steadier market after the same piece of data 3 years earlier. When you start to see this, it means that you have to adapt your expectations. It means you have to adapt the way you trade. You can trade more size, but you get far less ticks in this environment. Less size, more ticks. So you can balance that up, but seeing that difference in the way the markets move is crucial. The VIX is not your solution. The VIX tells you what you already know because you're seeing that progression on the ladders. Another simple thing to recognize environment change is correlation. Now, let's say you're an S&P trader. Last year, you will have needed to recognize that the S&P followed bond markets very clearly. This was a certain type of environment. The S&P follows bonds, it follows the dollar as well. You see dollar weakness, bond strength, the S&P does exactly the same. But as the environment changes, this correlation breaks down. What this now means is you do not need the 5-year if you're trading the S&P. You don't need the dollar so much either. You look at what the S&P's done recently, rallies and falls, at the same time the 5-year rallies and continues. So now the correlation changes. When you see that, this now tells you the environment shifted. If you want to trade the S&P, you don't want to be focusing on this in quite the same way. Or you want to be looking at the S&P and thinking, I should be seeing the opposite in the 5-year. That's how you're looking at correlation. You can do this with the dollar as well. So environment shift is about understanding which markets are following each other, how well they're moving together or whether they're moving in opposite directions. That you can bring into your trading because it then tells you which market you want to be watching at any single point in time. A third example of environment change is understanding predictability. You do not need to be an economist for this, but we all know what's going on with inflation. It is falling. So we know the trajectory of inflation. This is now more predictable. Where the volatility came last year and the uncertainty came last year is not that inflation was rising, but that we did not know how high it would go. That's where the uncertainty comes. Once it becomes clear, then the volatility starts to change. The environment starts to change, the correlations start to change. This is now the new environment that you're moving into. You don't need to be an economics whiz to work this out. It's just about following what is changing and the general trend of how things are changing. You could swap this chart for uncertainty up, uncertainty down, and that'd be a different way of looking at the same thing.